Okay, everyone, thank you for tuning in to today's live session. So it is 1:30 p.m. We're just about to be 1:30 p.m. There is some news coming out actually on dollar, so we'll be able to see that together in 5 seconds. We've got likes of the euro. Okay. Continuing higher. So, starting on the dollar index. As always. Now, if we remember from yesterday's live session, when I was talking about the just a moment. Continuing higher. So just making sure the microphone was working. When I was discussing the previous monthly low had been taken, obviously we're still within that region now. We're still within this daily demand area, the area that swept liquidity before breaking that high right there. Okay, we're still within discount prices, but we also still have this down here. So if price did want to continue down lower, I am looking at this for a potential reversal. If price is going to go bearish, these lows are going to need to be taken with closures below. We do, however, have this weekly imbalance sat below that low right there, as we've spoken about many times before. Okay, and conversely, to the upside, we do have this monthly imbalance to the high coming in at 115, 400, around there. And that's just taken from that monthly imbalance right there. Okay, so obviously keeping an eye on that. And with the news just coming out, let's just refresh this Forex Factory. Okay. So Thursday. So unemployment claims came out higher than expected, which is obviously negative for the dollar. Okay, so actual less than forecast is good for currency. This was higher than forecast. So that's why we're obviously going to see the dollar potentially come down lower. Like I said, we've got that area available on the 4-hour and the 8-hour. If we go down to the 4-hour itself, as we spoke about, the 4-hour did make the lower low because we closed below that low right there. So therefore, this technically is the new 4-hour bearish leg. So from that high down into the low. Okay. Now on the 1-hour time frame, this is what I was looking at on the 1-hour. So obviously we've took that low out. We've took out the previous monthly candle's low. And now we've done this. Started to make bullish structure. Okay. So we're actually bullish on the 1-hour. So you can see there I've just highlighted where we closed above that structure point. So let's just go ahead and mark these on together. So you've got a low, you've got a high, higher low. That's the higher high because that's when price broke above and closed above. Therefore, this would be the higher low. So if this structure is to remain intact on the 1-hour, then that high could be vulnerable. Okay. So we have got that right there. But let's remember the fact that we are bearish on the 4-hour as well. It's an interesting point in time for the dollar. It really is. Because we could easily just fall from there. We've got areas below. Or we could continue up because we're within this area, within discount prices. So I'm just going to keep an eye on this. If we're going to go bullish, then we're going to break that high as well, if that is going to be the case. And therefore, the 4-hour would have gone back to bullish as well, in alignment with the daily and the weekly. Okay, so moving on, let's go to euro dollar. Let's go to this chart. Okay, so euro dollar. So we had this 4-hour imbalance marked on from yesterday. So you can see price is reacting from that quite nicely from a bullish standpoint. So we've got 25 minutes left of this 4-hour candle to close. So like I said, it is looking bullish. We've got that 4-hour imbalance resting above this high as well, which is taken from over here. Okay. So, and obviously not to mention we've got the highs up here too. But if we remember what I was saying yesterday, we're still in premium prices of this. Now, I'm not saying that this low has to be taken now, but we could be in for a slight pullback from this 4-hour imbalance. Okay. Because this is the new leg now, so from this low to the high. We've not achieved discount prices, so if I just drag the Fibonacci from the low to the high, we've not achieved the 50% or less. We came close right there, but it didn't go below the 50%. So in this case, if we did continue higher, then I'll just be dragging that wherever we basically print the high, because I'd still count that as the low. Okay, personally. So that's euro dollar. Let's look at pound yen. So we are in 2 positions on pound yen currently. So one is a sell and one is the buy from Tuesday and the sell from yesterday. So the buy was taken out from yesterday, just came down during Asian session, so 2 a.m. we got wicked out. That's fine, it happens. So this is risk-free still. I was looking at a potential entry from here, but we haven't gave the signal as of yet. Why was I looking at that area? Because that's a 1-hour imbalance. Okay, so it was created within our trading hours. So that imbalance there, 7 a.m. created, came back through, spiked it at 9 a.m. and price is sort of hovering around here. So if I just go to the 5-minute time frame, the sort of lower high that I'm looking to be broken for me to get into an entry is that. Okay, and we've not yet, oh sorry, I've just drawn that on slightly. There you go. So obviously we've not yet come up to there. Doesn't mean that we can't do that this session. So again, I'm going to be looking for trades up until 4 p.m. and then that's me done in terms of actively looking for trades. So yeah, we could do that. We could have a bullish candle up here, close above that line, in which case that's going to be the entry. Stop's going to be 10 pips below that low. And I'm going to be taking it up for 3R. Okay, just following the system. That is if we get the long position available. What we also have as well is this 1-hour bearish imbalance too. This one right here. So if we come up to there and we form a break of market structure on the 5-minute time frame before 4 p.m, then I'm going to get in that as well. But until then, I'm just letting the market do its thing. Risk is managed. The trades are managed. This is now risk-free. This is still running, this sell. It's not reached the break-even point as of yet. The break-even point is down here. So 198878. So until then, we'll see what happens. It is looking like it's going to continue creeping higher just based on this impulse pullback. Now we're starting to form bullish candles on the 1-hour once again. But yeah, it's one of those things where it's a systematic approach. Okay, so let's move on to silver. Okay, silver. Let's look at this one. So what I'm going to do is go to the daily time frame. So if we remember, this is the daily imbalance that's within this weekly. Right here, we've got a daily imbalance right there. So the thesis is, if and when we come down into here, I'm going to put an alert on that. If and when we come down into here, then I'm going to be looking for a 30-minute break. You can see we've just hovered above. So that actually might be used as liquidity now in the future. So it could give the price even more reason to take early buyers out of the market, break some sort of structure, and then that would be the entry, stop loss below here, and away we go. Something like that would be ideal for this. Because again, if you remember the entry method I was discussing on silver, does work really nicely. I am forward testing this. I'm not back testing it. I'm forward testing it. Why am I forward testing it? Well, because I've got the GJ system in play already, so I don't need to be overloading on systems that I'm trading and back testing and all the rest of it. If this works, then I'm gonna incorporate this in the future. But for now, like I say, just forward testing this more than anything. So that's pretty much it. Obviously, we've had that impulse push out of the weekly imbalance. So if we were looking for a break of structure, it would be on the 1 hour in this particular case, which, to be honest, we have had. So right there, that's a 1 hour break. Closure above there. Stop loss 10 pips below here. If you remember what I was saying about the pips on silver, so you see how that's 6,295. That's basically 62.9 pips. All right. So we want to round it to the nearest pip. So 63 add 10, 73 pips. Okay. So again, as I said, I'm just forward testing this. So this is a 1 hour structure break. Let's just see if that plays out. But I do favour the daily imbalance being retested. Right there. So that's what I'm going to be waiting for in terms of marking these on, just to share with you guys as it's playing out, so to speak. Okay, so that's silver. Let's look at gold. I've not looked at gold for a couple of days. Okay, so on gold, if we remember, I was saying about, from a technical standpoint, we broke structure on the 4 hour time frame. Yeah, we broke structure to the downside on a 4 hour time frame. So that's represented by that blue line. Let me just zoom in here. That's represented by that blue line. I know it looks a little bit messy at the moment, but these are just the imbalances on here. I'm just going to take that off now. And I'm going to take that. I'm going to leave that on there actually. That's a 4 hour imbalance that's clearly been mitigated. Okay, so let's just zoom out a moment. So on the weekly time frame, let's just look at this from a rational standpoint. So on the weekly, bear with me, there you go. On the weekly, we obviously made that highest high of all time. This was at the start of April. Okay, so a couple of months ago now. Made that highest high of all time. Price simultaneously created this weekly imbalance. Okay, so price came down into that. It did take a few weeks, so 1, 2, 3. And then on the 4th week, we've seen a reaction out of that. The 5th week, obviously we continued bullish, and then the 6th week, look at that weekly candle. So price made a new high, but it didn't close above that high. This is what is a bit suspicious to me, but this is not to say that we can't continue higher, but it is a little bit suspicious to me as to what price has done, because we are so high up. We might be in for a pullback potentially. Now, whether that pullback's going to be significant or just into here, who knows? But for me, this is showing signs of a pullback. Number one, the reason why, is because this is just a weekly wick above here. We've had a strong bearish weekly close, as you can see. Reason number two is on the 4 hour, just following these red dots right here. This is the 4 hour structure. Okay, this is the 4 hour structure. So we had the low, again, this is coming out of that weekly imbalance to the downside. Then we started to put in higher highs and higher lows. That's that low, high, higher low, higher high, higher low, higher high. This then became the most recent structure point from a 4 hour standpoint. Okay, because remember, this is the 4 hour time frame that we're looking at right now. Price then did what? It came and collapsed into that low, and we've closed below that low. So that to me is the first sign that price could go bearish. Remember, it's not an exact science that price is going to go bearish, but it's the first sign that price could go bearish. Okay, so what we can do on here is we'll mark this on. So we'll say 4-hour break. Okay, and this is something I recommend you guys to do, when you're analyzing your charts. Just don't be afraid to go in there and start annotating things on, just so it makes sense to you. Because, there are going to be lines everywhere to begin with, especially when you're learning how to trade in the beginning. So it does help for you to just mark on what they actually mean. So you can see here as well, this is a position that I had marked on, which is currently in profit actually. And I was targeting these imbalances here. So let me just drag that down to that daily. So the reason for this is because we had a 4-hour imbalance right there that was left untampered with. Okay, it was completely fresh. It had not been retested. Even when we came down here, it didn't retest it. Price then came into it and moved away. This was in Asia session, so there wouldn't have been a trade in there. You can see at the bottom of the screen there, 3 a.m. Okay, we don't trade Asian session. Price comes up, comes back down to retest. So because this is a 4-hour imbalance, if we remember, we want to be going down to the 15-minute in this particular case. So we want to be looking out for a 15-minute break. What do we have? Lo and behold, a 15-minute break right there. So that would have been the entry, 10 pips below there. So this is something I marked on Monday, as you can see. It did actually run into really nice profit right there. 3.6%. Came back down to entry. But ultimately, I was just leaving it on there to see what happened. And we did actually see another reaction out of there, which is really nice. So why am I targeting those areas to the upside on this paper trade? Well, because if we remember, the 4-hour has gone bearish. Well, that's the first sign that price has gone bearish. So what we want to be doing is putting the Fibonacci from the high down into the low that's been created, which is right there now. Okay, so it's still the same structure in terms of the time frame. We're just moving the structure points. So that now becomes the high, that now becomes the low because that broke that. So we want to be buying within a premium. What do we see within premium prices? So in other words, anything above this 50%. If we go to the daily, we can see this daily imbalance right there. Daily imbalance. And then if we scope down one more time frame into the 4-hour time frame, we can see a 4-hour imbalance within that daily imbalance. So those are just the areas that I had in mind. So if price actually comes into there, we could see a potential short opportunity out of there. It's not going to be 100% guaranteed because, like I said, just because we've had one structure break doesn't necessarily mean it's going to go bearish from here to then create a new low. It just means it's the first sign that we could go bearish. Okay, if it did this, right? So let me just draw this on with you guys. So this is the 4-hour structure. Higher highs, higher lows. Then we make a lower low, lower high, lower low. Then this is confirmed bearish structure, and then we'll be looking for anything within premium up here to sell from. Okay, so that's essentially what could happen. Whether it will, who knows. What we could easily do as well is just completely blow through all of this and just continue the uptrend to take that high out. But as we know, whatever comes up must come down. It can't just continue going up forever. There has to be a pullback. Well, not necessarily there has to be. It's likely that there will be a pullback is the better way to word that. Because we've got a monthly imbalance right there. I mean, that could be enough to pull price back down before it wants to go higher, if it wants to go higher. Even looking at the monthly candles, look at the exhaustion as we're coming up in these highs. These are monthly candles, remember. So price is going up, closing back down. Price is going up, closing back down. So it's kind of like the momentum is dying off a little bit, you could say. And obviously, this being a monthly time frame, that's going to be quite strong information that we could take on board, to be honest. Because look, we've made a high there in the past, big wick to the downside. Obviously, the following month was bearish. In this case, we've had two big wicks to the upside. So yeah, potentially in for a pullback on this. So we'll have to see what happens. Let's look at something else. So let's look at GJ from a top-down analysis point of view rather than a systematic point of view. Okay, what I mean by that is using the same concepts and techniques rather than just looking at that 3R system. Okay, sometimes good to do that. So let's look at the 12-month. If we remember on the 12-month, we've got this 12-month supply all the way up here. So the bottom of that is basically 220. Let's call it 219 to be precise. So you've got that all the way up there. On the monthly time frame as well, this is the monthly imbalance that we have reached that was created in 2008. We've got that monthly supply right there too. So that's something I'm actually keeping an eye on. So the bottom of that comes in at 208. Okay. So it's still quite a fair bit away from where we are now, to be honest. Let's just take this off the monthly. We don't need to see that on the monthly. Likewise. So that's the monthly. Obviously, we've got imbalances down here, but this is quite a way away. I mean, this is thousands of pips away, if I'm not mistaken. Yeah, 2,300 pips away. So that's not to say it's not possible. I do think we are going to reach there eventually. Again, what goes up must come down. But how long that will take, no one can tell you, essentially. But it's just important to keep these areas on the markets and on the charts. So looking at the weekly point of view, we have just reached this weekly imbalance. So we've spiked into that. And it is looking like we're having a nice reaction out of there, to be honest. And what I actually like about this as well is the fact that, yes, when we initially came into this weekly imbalance, we sold off. But number one, we didn't break a low on the daily when we did sell off. All it was just a pullback. And number two, the following weeks after that, we've now managed to close back within here, within this weekly imbalance. So initially, it was a bump on the head because we hadn't seen these prices since 2008. Okay, so that was 5 weeks ago. Price pulled back, and that's all it was, a pullback. Just there, look. If this was going to be a very, very bearish move, then that low would have had to have taken. And we would have needed to have seen a break of structure and a closure below that low. Why? Because that was the daily low that made the high. But price didn't do that. It just did this. Went up, came down, and now it's gone up. And actually made a higher high there as well. Okay. So, with all that being said, that's why I believe we could actually continue higher. And remember, we've got that monthly supply right there. This red box. 208 is right there. Looking at the crosshair on the right-hand side, just there. That's 208. So we could be creeping up to there potentially. So we'll have to see with that one. What we've also done as well is we've tapped into this daily imbalance, which was within this weekly imbalance. So very, very nice price action there. On the 4 hour, again, looking bullish because we've got that. Just going to take this off the hourly. Actually, I'll leave it on there. Looking bullish because we've just come into there. We've come into that bullish 4 hour imbalance right there. Plain and simple. Yeah, plain and simple. That's all we've done there. Okay. Daily. can even mix up the concepts. That's technically a daily support that we've just came into. 4 hour. You could even call that an inverse head and shoulders. I mean, I don't trade those sorts of patterns, but you've got the left shoulder there, you've got the head, you've got a potential right shoulder, and away we go. That's what I do think could happen with this. From a multi-time frame analysis standpoint, so to speak. But like I said, if we do come into that 1 hour imbalance up there and we form the entry model, I'm going to go short. Vice versa, if we create another 1 hour imbalance and then we, say for example, there's another 1 hour imbalance that gets created and then price comes back down into here, forms the entry model, I'm going to go long. Stop loss below. Okay. Simple. So that's pretty much it. Nice analysis on GJ. It does make sense for it to go higher. We are in the sell and we are in the buy. The buy position TP is, bear with me. Oh, sorry. Is up here at 201.001, around that region. It is required to put in a new high, but I don't think it's impossible for it to do that. Okay, I don't think it's impossible for it to do that. So we'll have to see what happens at this area. This could be a nice trade as well. And also, you know, a 1 to 3, you're not necessarily expecting new lows to be taken at 1 to 3. We could even take profit if it comes down even into here. So that's the nice thing about that. So that's pretty much it. I just want to thank everyone for tuning in that did tune in live. So I'll see you guys on the next live session this afternoon at 3:30 p.m. If you've got any questions, as always, please pop them in the Discord group and we will obviously respond and get back to you with any questions you may have regarding anything to do with trading and all that good stuff. So thank you again for watching and I'll see you in the next live. Take care, guys. Cheers.